Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. This is coming to you from the live trading room on the 26th of June, 2025. And it's in the afternoon, and the market is doing just great, and we're doing just great. We've got all kinds of fun long trades on in both the live trading room and the live options room. And just about everything is going gangbusters today. Now, let me remind you that if you want to join us, you go over to drstoxx.com, click on the subscribe menu, scroll down to the live trading room. You can subscribe to that. Very cheap. I keep it cheap so that everybody that is trying to learn how to trade, new traders, small account traders, can all join us. And if you want to add on at a discount the live options room, you'll be given that chance as you sign up. All right, let's go to. We're going to keep this short today because I'm a little bit behind schedule, and there's a lot of good stuff going on in the market, and I don't want to miss a minute of it. Although I just took a 2-hour lunch break, so I guess I did miss a little bit of it. Here is the S&P 500, and you can see here is the April 7th tariff panic low. Let's just call it that. And I'm going to go out on a limb and say that panic low there was the bottom of a very short-lived bear market. We might even consider it to be the last gasp of the bears from 2022. Right? There's still that 2022 was a very short bear market. We did not go into a recession. It was some anticipation of changing administrations and on and on. And then bottomed out October 23, rallied sharply back up to new all-time highs. And then Trump in office came out with this tariff plan. And that sent the market, you can see, sent the market from new all-time highs all the way down to very deep lows, 20% in just a matter of a few weeks. That was the shortest lived bear market in history, I think. I might be wrong about that. But we've been all up ever since, and I'm going to call this the first leg of a new bull market. And I think this bull market is probably going to last another 4 or 5 years at least. That's usually how long they last, right? Bull markets tend to last 5, 6, 7 years. Bear markets 1 to 2 years. And so we got the bear market out of the way in 2022. We got the last gasp of it out of the way in 2025. And now, new leg of a new bull market. All right, so here, where are we? We are now at all-time highs on the S&P 500, and you can see that green stick right there is confirming today's breakout. Now, we need another stick above today's highs to confirm today's breakout, but it looks very good. It looks very good. The only thing I'm a little concerned about is that the volume's starting to drop off, and that does tend to happen when you get a little too much upside too quickly, right? A little too far too fast. And, a lot of money, a lot of big funds, a lot of hedge funds are still over in cash. They're still hesitant to get back into this market. They're not really believing that it is the real deal. They're worried about another tariff rug pull. I don't think any of that's going to happen. I do think that we'll see. We're already starting to get some hints today. In fact, we'll see that the deadline coming up in early July is probably either going to be extended, or there will be some trade deals made, or something's going to happen. I don't think it's going to be another crash on that deadline. And so we'll probably stay up above that black line, maybe forever. Maybe we'll never go below 6,100 and something ever again. That would be nice. Probably not the case, but nevertheless, we can dream. So I really thought, and a lot of folks in my pro trading group thought, that yesterday's tag of the all-time highs, which succeeded the previous day's tag of the all-time highs, and without any further upside, I thought that was going to precipitate a little bit of some sideways churn, consolidation, tight, choppy trading. No, it's right back up again. Same is true for the NASDAQ. We are up at all-time highs, and this is truly an all-time high. We could even say that it broke out yesterday. Today's the confirmation day. Volume is starting to fall off, but then volume has been elevated lately. And so a lot of folks, they get into these moves early, and then they don't have to do buying later. what we're seeing today is what we might call the FOMO leg of the rally off the April lows, fear of missing out. So folks who have been just kind of sitting on the sidelines and watching the market go up day after day, just finally threw in the towel and said, okay, I'm going to buy. I'm going to jump in and buy some stocks. And I'll show you what they're buying today. This is another clue that we may be nearing a very short-term top that will then lead to some really nice and lower risk setups than we have right now. So that's the NASDAQ. NASDAQ's doing just fine. It was weak early. It's strong now. And that's what you want to see, right? You really want to see that. Small caps. Now, they were a little squirrely yesterday. They had a nasty day yesterday when the rest of the market was up. They were down. And they were actually below yesterday's lows early on this morning before the bell. But it's been all upside ever since, and now we're testing the 200 period moving average. So the Russell is nowhere near all-time highs, and it's nowhere near 52-week highs. It's the one that has really been clobbered. It's clobbered, of course, by tariffs threatening inflation. Inflation puts the Fed on pause, keeps interest rates high, squeezes margins for small cap companies. So small cap companies, of course, are not enjoying this ride nearly as much as some of the bigger players, but they will have their day. And I do think that once we get past this little consolidation in the broader market, we'll see the small caps do really well. I think they're going to have a great summer. Great summer. And I would say by mid-July, we will be long. We'll be long everything that's small cap related, right? We will have IWM calls. We'll have TNA. We'll have M2K Micro E-mini all on board. Okay, so but that's not right now. That's a little bit later. Gold is up a smidge today. It is down at the 50-period moving average, the pink zone of an uptrending LRC. It is looking like it's a nice-looking bullish setup. If the market does consolidate, gold would probably be a pretty good place to be. And the dollar's been weak. So gold likes to rally on a weak dollar. I'm sure we're up at peak Fed rates as well. That should help gold also. Now, if Trump has been hinting at replacing Powell for the Fed chair, I'm not sure if that's even possible, but if that does happen, he'll likely put someone in there who is much more open to lowering the Fed funds rate, and that would be very good. Good for the overall economy, good for stocks, especially good for growth stocks and small cap stocks. But we're not there yet. We're really not there yet. All right, so that's gold. Let me show you silver real quick because I got a note from a guy in my pro trader group who's saying, watch silver. And silver is breaking out nicely today of a falling wedge into the 21-period moving average. If you compare this to gold, silver is actually outperforming, has been outperforming for several weeks now. Now, gold is way up at all-time highs or just below. Silver is nowhere near all-time highs with a lot of upside. It is at 52-week highs or close, but in terms of price momentum over the near term, silver is outperforming. So with all that catch-up having to do that, and silver is also a play on the housing home builders because they use silver in a lot of their compounds when they're making new homes. And home builders have been really sluggish on high mortgage rates and other things. So if that's at peak and silver is breaking out and there's a flush into shiny metals because the dollar is so weak, this is a good time to be in silver. Now you can leverage silver with AGQ, one of my favorite trades, and we haven't been in it for quite a while, but maybe this is a good place. Here's the same falling wedge. Maybe this is a good place to be for the near term. Yeah, I like silver. I like gold. I think gold is setting up quite nicely. It's not a buy just yet, but maybe in the next couple of days we'll be long gold. Real quick, let's take a look at Bitcoin. We are long Bitcoin. We have, I'm in the MBT Micro E-mini. My subscribers in the live trading room are in IBIT, and I know that we don't have it in the options room at all right now. We did for a while, but not now. And I have my ETF letter members in IBIT as well. So breakout yesterday. Now it's not confirming that breakout, although it very briefly it did get up above yesterday's highs. That's a positive. We're holding near the top of that candle. That's a positive. If you look at this 3-bar move, which was quite far, quite fast on good volume, we're not surprised that it's seeing a little bit of a pause up there at the top. There is some overhead that's got to get through. So 110 is a key number. 112.5 is your all-time high on an intraday basis. I think we'll be up there by mid-July pretty easily in MBT. The short-term target, or where would you get out? Well, you want to get out probably up here in the blue zone. When it gets up into the blue zone, it does tend to cool off a little bit. So let's see if it does get up there. This whole area right in here is quite a congestion, right? A lot of choppy trading. It's down for 2 weeks and then up for 3 or 4 bars. Down for 2 weeks, up for 3 or 4 bars. So we don't want to see another leg down, but that is possible. We could just see a lot of churn. But I think if you just hang on to Bitcoin, even to the end of the year or longer, I think you'll be nicely rewarded. Okay, now let me show you some fun charts, and then I'm going to let you go. I have I'm calling it my big upside growth list. And so what I've been doing is querying my pro trading group. What are some of the lotto trades that you're in? What are some of the fund money trades that you're in? What are the momentum trades that you're in? I also run a variety of momentum scanners in my market surge software. I have a couple in FinViz and what's the other thing? Research Wizard. And when I run those, I dig down into some of those companies and I put them on this list if they look like they have really good upside, right? Looking for 2 things here. We're not looking for earnings. We're not looking for valuations. We're not looking for, a big funds buying or institutions buying or insider trading, anything like that. We're looking for growth, number 1. And number 2, we're looking for price momentum. And with those 2 things in mind, I have made this list. Now, there are a few on the list that probably don't satisfy those requirements strictly, but they're on here nevertheless because they do, or they can be, and they have been in the past, some really fun stocks to trade. I was going to tell you another thing too, and I forgot. I mentioned this in the options room the last time I was on the live mic there, which is yesterday, day before yesterday. It's all kind of blending in this week. Having too much fun this week trading. I did mention in the options room that I have a guy. He's not a friend. I don't know him at all. Never met him. But when I was starting to trade back in the 90s, he was kind of a big name, mainly because he was not a professional money manager. He was not a finance guy. He didn't graduate from Harvard. He was a high school teacher. And he took a small account, something like $10,000, and he ran it all the way up to a 7-figure account. It was 5 million, 8 million, something like that. And word got out about him, and he was all in the news, and he was featured in this magazine and that magazine, and kind of hit the limelight for a while. And then he just disappeared. I don't know where he went. I don't even know if he's still trading. He might have just retired to a beach in Bermuda or something. But this is what he taught me, and I want to pass this teaching on to you. You can have all the indicators on your chart that you want, and I do find them helpful to some extent. You can have on, like I have here, the linear regression channel. You can have your moving averages on there. But there's only one thing that you make your money from. It's not the indicators. It's not buy-sell signals. It's not moving average crossovers. It is the price. The price only pays, right? That's an old trader's adage. And so he used to trade. Let me show you what it looks like. He used to trade with, let's get rid of the drawings and let's get rid of the indicators. This is the chart that he used. He didn't even use candlesticks. He used bar charts, right? Which I'm not going to use these because you can hardly see them. They're very faint. But he didn't even use candlesticks. Hold on, let me get back to candlesticks here. Okay. So now he traded 3 things, only 3 setups in his system. And this is how he made, right, from 10 million to, let's say, 5 million. I'm sorry, 10,000 to 5 million in a very short period of time. Now, keep this in mind. He was trading back in the 1990s. That's when I started to trade. He had already been trading for several years. And in the late 90s, the market was a roaring bull market. It was the dot-com era. And you were seeing stocks that are still around today, like Dell and Intel and Avgo, or Broadcom, it was called back then. And uh, I don't even think Apple was a thing back then. Maybe it was. I guess it kind of was. Yeah, Apple and Dell. I mentioned Dell. AOL was a big one we used to trade. Anyway, these are stocks that Qualcomm was another one that were up over $100 a share, $200 a share, and they were moving 50, 60, 70 points in a day. Crazy, absolutely crazy trading back then. Now and then you see something like that show up today, but I think, with the advent of algorithmic trading and halts and circuit breakers and all that kind of stuff, we don't get those huge moves like that anymore. But back then, you could make in a fairly small account, because you could day trade the heart's content without a $25,000 minimum account back then. No pattern day trading rules. You could put a 20 share buy of Broadcom or Qualcomm, and you'd come away with $2,000 or $3,000 by the end of the day. Right? It was that kind of a market, a crazy market. So anyway, he was trading then, and he had three pattern setups that he only traded price patterns. That was it. Price patterns. He traded the pullback. Let me get my marker out here. So, uptrend, pullback, uptrend, pullback, uptrend, pullback. And the way he would trade this is that he would trade the turn, right? So once it broke the pullback resistance line, he would buy there. And then he would buy more once it broke the most recent pivot high. So he was stacked his positions, and he would keep stacking. So he would buy more here, and he would buy more here, and more here, and more here, right? So that's the pullback. He traded that. And then he also traded consolidation. So he's looking for a really strong uptrend, right? Typically rounded bottom, momentum increasing, and then you get this little flag, right? Little flag pattern. And then it breaks out again and you get a whole new leg higher. He bought right there. Okay, so that's pattern number 2. And then the third pattern is some kind of a pattern breakout. So something like an inverted head and shoulders. Right? Inverted head and shoulders. He traded this a lot. Right? Here's your neckline. He would buy here, or a cup and handle. Right? Here's your cup. Here's your handle. And he would buy right here on the breakout. So price patterns only. Those 3 setups, right? Pullbacks, consolidation, some kind of a consolidation. Could be a triangle, could be a flag, or pattern breakouts, and bullish pattern breakouts. He did some shorting as well, but he always liked to stack going up. So if he got a good successful trend and it just kept flagging, breakout, flagging, breakout, he just kept adding to that position. And then, I'm not exactly sure what his sell rules were, but he had some, if it broke the uptrend line, if it closed below a moving average, that's when he would get out of the position. All right, so with that in mind, we can look at some of these charts that are doing really, really well, and we can see, hey, maybe there are some price pattern setups that we can look at. What is this one right here? This is Bitcoin, right? And we looked at Bitcoin already, but there's your consolidation, right? Uptrend. Oops. Uptrend, very strong momentum uptrend. Bull flag. Where are you going to buy it? Right up here on the breakout. We're not there yet, but it's getting close. This little guy is an AI play, and it's been getting a lot of chatter on the social media boards. Had a big breakout, big green stick. That's not the day you want to buy it. You want to monitor the pullback the next day. You can drill down into an hourly chart, apply your Fibonacci retracement tool. We were talking about that last time. And monitor that the money zone, right, between 50 and 61.8. That's where you can put a limit order if you want. And if you did that yesterday, I'm not sure, but I think you might be long today. It had a really nice bounce back. It's not a buy here, however. Rocket Lab, I was monitoring a fib retrace yesterday, and it never got anywhere near never got anywhere near the 50 retrace levels. So we'll have to see if Rocket Lab slows down. But look, there are some signals along the way, right? So here's your rounded bottom. Here's your little handle. So where would you buy it? You'd buy it on that breakout right there. You can put in a stop order, right? A buy stop order at that price. And does it give other signals along the way? Yes, it does. So here's another breakout. You would buy it there on that at the beginning of that big green stick, but it's not setting up right now for another buy. I have HIMS on my list just because I think that this gap is probably going to close sometime in the next couple of months. I still have some shares myself. We were in a nasty, so here's the thing. Let me show you this chart. Everybody and his mother was looking at this pattern, beautiful, perfectly formed, deep, rounded bottom, rounded cup handle, breakout on that day right there. And then they had this relationship, right? They're kind of a telehealth play. They have this relationship with, NVO? What is that? I can't think of the company name right now, but that is a Dutch company, I think, that owns the Wegovy obesity drug. And HIMS had a partnership with them to sell it, and then they pulled out of that partnership because they said HIMS was acting in a fraudulent manner. Now, that's horrible for a company, horrible for the brand. Whacked way, way down on that news. Now, I do think that it was a bit overdone. The company came out and denied a lot of that stuff. They probably have some kind of an explanation for what's going on. It probably will get back on track. It's one of the best growth plays in the market right now. It really is. If you look at their EPS growth over the last few quarters, it's just going skyrocketing. So yeah, you want to be in HIMS, but it's not setting up. It did set up for a false breakout of magnitude, but I think it's going to get back on track. IREN. So we're long IREN. No, we're not long IREN anymore. We took profits on this one over in the other room. We had some calls on it. We had shares in the live trading room. Then we jumped into calls in the live options room and got a nice big uptick today. ALAB. And now this is one to watch. So you've got your rounded bottom. You've got a nice looking cup that's a handle that's forming. Not according to my friend's system, it's not showing a buy signal just yet. It could kind of toil around in this little area down in here for a few days, so I don't think I'd buy it right now. But if it does get up above like 99.50 or so, put a buy stop at 99.50 and see if you get stopped in the next few days, and that looks like a very, very nice bullish setup. We don't know the volume. We don't know what the moving averages are doing. We don't know if the LRC is uptrending or downtrending. By my friend's rules, we don't care. We actually don't care. We're just looking at the price. And this is a bullish setup, and we're going to trade a bullish breakout. We're long NBIS. I think we're still long, right? Yeah, I think so. And this is a nice looking pullback, right? Nice looking pullback setup right here. I don't think we got in on that breakout right there. I think we actually bought the little pullback right here. There was a moving average tag, and then it rallied back up, and I wanted to get in before the breakout, which we did. It is forming an inside day bar. Yesterday was a little nasty. No, I think we did sell this one yesterday, didn't we? Yeah, it came up here to test. Yeah, that's right. It was a double top, tested the prior intraday high. I think that's 52-week high, and started recoiling and started falling. And I said, hey, we don't want to lose our profits. So we jumped back out. And of course, it's right back up again today. It's not really an entry here. I would wait until it comes back down like it did this morning, test the top side of that pullback line. APLD was a fun one to trade on this rally up. But here's the thing that my friend also really taught me. When a stock does a big Momo move and then pullbacks after that, because it has already shown itself to be capable of that sort of strong upside move, keep an eye on it, because it's bound to do another move like that. You just have to find the right entry. I'm not sure this is the right entry just yet. As a very steep pullback, I don't really trust a steep pullback like that. I'd rather see something a little softer, but we'll see where that one goes. We're long SMCI, and you can see now why. It's just pure pattern breakout play. Now, we got in before the breakout, so we got in down in this area. It was early morning yesterday. Nice rally up, follow through today. Love it, love it, love it. And this looks to me like it's going into the low 60s. DCT is a new one. I've not known this stock for, at least I haven't looked at it for a long time. But again, here's your rounded bottom. Here's your handle. Big breakout today. Now, if you want to be, you know, if you want to be technically correct, you could go ahead and buy this here because it is, in fact, a confirmed breakout today and on very strong price movement. But I have this rule about a big green stick. Typically, if you buy at the top of a big green stick like this one, you're going to get a better price sometime in the very near future. So you can see, right, here's a big green stick, and you could have gotten a lot better price the next day. We had a big green stick yesterday, and it did come down a little bit. It was showing red earlier today. So I don't like to buy big green sticks, generally speaking. But if it's FOMO, you got to go with FOMO, and this is kind of showing me that. We're long OSCR in one of the rooms, and I'm forgetting which one. We've been in both rooms at some time. So here's the thing about OSCR. Let's use our little tool, and I think we'll end with this. Wait, first of all, let me get that supply-demand indicator off. Okay, so here's how you can use. So let's say you come to OSCR on the daily chart, and it's way up here, right? It's up above 22, and you really like it. You think, man, this is the next HIMS. That's what a lot of folks are saying, at least in my media feeds. It is the next HIMS. It's going to double in the next year or whatever, right? Everybody's excited about OSCR, but it's shown massive price increase in a very short period of time. Very dangerous trade to get into. Lots of risk. Upside is minimal. We want to get in on a pullback. All right, well, how do you know when to do that? You go to the 2-hour chart. I like the 2-hour chart. Sometimes I go down to the 1-hour chart, and you put on your Fib retrace tool. You start at the beginning of the most recent uptrend, pull it all the way up to the top of that uptrend, and you look at your levels. 0.318 is your first level, right? And it's typically a pretty good place to nibble a little bit, but you get a much better risk reward ratio by waiting until it hits the 50 and even dips below the 50 to somewhere between the 50 and the 618. I call that the money zone. Right? That's the green label here. So if you look very carefully, you're going to see a dip. This happened yesterday, intraday, down to the 50. Didn't quite cross it. Not quite. But rather than just buying up here at the 31.8 on the first touch, if you had waited till it got at least close to the 50, you'd be in. You'd be in the trade. And you'd be in around 1840. And right now it's at 20 and change the next day. That's a nice start to a really good swing trade. So that's how you use the Fib tool to determine entries when it's just going up like crazy and you want to get in. The same happened with Circle. We had such a nice trade in Circle, and as usual, I got out too early. We got out on this big green stick. It was under 200. It was like we were looking for 199 or something, 200. We were looking for 200, tagged 200, but we got out before that. It's like in the upper 180s, I think. I'm forgetting exactly. And then it was just all up to the races, off to the races. Almost got 300 the next day, a couple of days later. Now, let's say you come along Circle and, hey, I want to take part in this action. It looks like a lot of fun. Of course it is. But where do I get in? If it's up here at 280, I'm not going to buy that. There's no risk reward up there. So you go down to the 2-hour chart, and let's get rid of that guy. And you put on your Fib retrace tool. Now, this is an IPO, so pretty much the whole thing is your uptrend. And you can see that it did, oh, it's really raining outside. it did crack the 31.8 and got between the 31.8 and the 50. Okay, that could be your first nibble. Is it going to never come right back again? No, I think it's probably going to do another rollover, and then we can get really on board. We don't have any shares right now, but we can get really on board back here in the green zone, the money zone. Now, that's one way of doing it. Another way that a lot of folks do is they don't use the dominant trend. They'd use only the most recent trend, which would mean you'd put your beginning right here at this little consolidation. At the bottom of that consolidation, that's where the current trend started, all the way up to the top. And then you can see, hey, it did get into the green zone. It did, on that basis, got into the green zone. Now, this is because we're only using this short-term trend with the fib retrace, it's going to be a short-term trade. So you're going to have a tighter stop. You're going to get out at a lower price. If you're using the hold trend, the big long trend, the dominant trend, you got to be patient for your entry. It's not there yet, but when you do get in, you can use a wider stop and a much higher target price. All right, guys, I'm going to have to let you go. I'm sorry. I would love to keep chatting away about Stoxx. It's one of my favorite things to talk about, but let's go ahead and wrap it up here. God bless everybody. I'll see you back in the room after I produce the video and get it over to the YouTube channel. We'll see you back in the room in just a minute.